How's it going, everybody? Welcome back to Trades and Gains. I'm your host, Max Pitts, and what do Apple, Nvidia, and your uncle's Bitcoin wallet all have in common? They all got spared for now. Welcome back to another episode of Markets on Mute Unless It's Panic Time. Today, we break down why tech rallied, how Trump's tariff flip-flop is keeping investors guessing, and what institutional money is doing while retail refreshes Reddit compulsively. Now let's go ahead and recap the market for today. When we look at our overall indexes, we saw the S&P 500 with a 0.79% pop, the Nasdaq with a 0.64% gain, and the Dow Jones up 300 points or 0.78%. And the big winner of the day, confusion. Let's go ahead and walk through it. Trump's trade war gets an edit again. Now, over the weekend, news broke that smartphones, PCs, and electronics were exempt from tariffs. Apple and Nvidia rallied on the Reprieve. Then, Commerce Secretary Howard Lutnick said, just kidding, those electronics will be taxed later. Then, Trump logs on to Truth Social and types in all caps, no exceptions, semiconductors are under national security review. We're back to chaos, market rallies anyways. Now, the market rallied on exemption, not because tariffs are going away, but because Apple dodged a $200 iPhone tax. And that's for now, mind you. Trump's policy resembles a Waffle House menu. It changes every 10 minutes, but still causes indigestion. And Treasury yields slid below 4.36% and the dollar weakened, hinting the bond market smelling recession fumes. Now, some other things we had, Waller warned high tariffs could push inflation to 5% and growth to a crawl. He floated rate cuts as a lifeline, but said this could backfire again, like the transitory mistake of 2021. We saw housing stocks rebound with Wedbush, with builders like Toll, PAMH, and DHI, with being a buy on weakness. So move up buyers, especially if you are not rate sensitive either. Bigger picture, we got a 2 day of bounces coming. But we have tariff turbulence that's going to rock us still. So the bond market's flinching, the dollar's under siege, and CEOs are yanking forward guidance left and right, which is just never a good sign whatsoever. Now, some sector notes here. We had tech with the big bounce, Apple up 2%, Nvidia up 1.3%. The Mag 7 is playing ping pong with policy risk right now. Autos, GM, and Ford were up on 3% with whispers that Trump might delay auto tariffs too. And Palantir was another winner, up 4.6% on NATO buying its military AI system because nothing says bullish like an AI targeting system. Now let's go ahead and head over to our favorite data provider, and that is Investor Central Club. If you want quick, actionable insights for your options contracts, or you just want validation on a thesis, Investor Central Club may be for you. It will give you quick, actionable insights that are easy to read and very straightforward, so you know if you have validation for your trades or not. But enough of the intro, let's dive into the data like we do daily. So, flow scanner snapshot that we have today. SPY, it was a pretty light day for SPY. We only had 60 million in total premiums spent, with 7 million in calls against 53 million in puts, and our most common contract being that 525 that is due on the 30th of next month. It looks like we are seeing some more downside here with that flow. Translation here, someone's hedging hard for a drop by May. That's all I can really say with that. We saw NDX, IWM, and Tesla all massive put activity, as we can see. NDX, we had 1.69 million in total calls against 57 million in total puts, putting them at 59.3 million in total overall flow, with our most popular contract, which these are massive, 1124 at the $19,000 spot. So yeah, those were some pretty aggressive hedges. Probably nothing that retail's getting into. IWM on that side, we saw some golden sweeps at the 177 due on the 16th of May. So we're expecting some more downside in that smaller, small cap market, as they would call it. Nvidia was one of our bright spots with, again, it's a coin toss every time. We had 30 million in flow with 19 million in calls against 10 million in puts, with our most common contract being that Nvidia 250 call, I want to say. No, 125 call was our most popular contract here. Or 115 was our most popular contract, due on the 25th for next week. So it looks like people are bullish on semiconductors and think Nvidia may be spared. Also some bullish news with Nvidia of building supercomputers US side. So big news for them. QQQ obviously had some bullish flow today. 24 million calls against 3 million in puts. That should be obvious with the tariff pause on electronics. That's mainly what QQQ is made up of, tech companies. So we were going to see a bounce there. We saw two golden sweeps here. Heading into market close at the end of the day, and our most popular contract here with QQQ on the day was the 525s that are due on the 19th of September. So someone has some long-term bullish bets here. Now let's go ahead and talk about our aggressive bullish bets. Nvidia saw 30 million. Again, we just went over this. Meta and Google also had meaningful bullish flows ahead of their legal battles and earnings. And some unusual options activity that we sold today would be multiple SH calls, inverse S&P ETF. It dropped early in the session, possible bear hedge that is unwinding. SPY and IWM puts sweep hit midday, bearish sentiment trying to catch the fade here. And Google 275 calls expiring in October caught fire with size blocks suggesting a longer term AI play for a breakout. Now let's go ahead and look at our dark pools. So let's organize this real quick. So SPY, even with the low volume day that we had, it still saw about 313 million in total overall prints. Yeah, we're always going to see those SPY prints come. You don't know if they're coming or going though. VTI, IVV, and VU had $1 billion combined, and the translation is whales are rotating but not fully committed to a direction yet. So we're most likely going to continue to see the market just kind of toss and turn and all that kind of good stuff. Some block trades we had a big cross trades in PLTR and Goldman Sachs, hinting at institutions positioning for Q1 earnings plus the defense sector ramp. QQQ saw some notable prints in the 345 puts, a hedge for the tech earnings volatility. And the conclusion here is playing hedged long ahead of earnings, and they're waiting for Trump's next tweet before doing anything else. So let's wrap this up. What do we do? Where do we go from here? What are we doing now? So bottom line is this. Apple and Nvidia got a timeout from tariffs until they didn't. The market wants to rally, but hedge funds are saying, nah, hold my VIX. Palantir is building Skynet for NATO, but we're calling it bullish. Treasury yields dipped, the dollar fell, and retail thinks this is the bottom again. Bottom line, the market is pricing in hope, hedging against horror, and holding out for Daddy Powell to intervene if it all blows up. And Trump, he's running fiscal policy through live streams and hashtags at this point. If you enjoyed this video, make sure you like, subscribe, comment, share with your friends so you never miss, and also turn on that bell notification so you never miss a video. catch you guys tomorrow when this entire narrative flips again, because let's be honest, we're going to talk about how the market tanked tomorrow and how horrible things are after a 2-day rally. Hope you all have a good night. Sorry for the late episode, and I'll see you in the next one.